plays and some technical skills that pretty useful in current market of this incredible bull market. Let's talk about yesterday plays. So CMBX, OWCP. So in my opinion, I think OWCP is one of the sympathy plays on CMBX. And yesterday, I see this top did not hold, and after crack 6.58, I think this is probably the end of CMBX. I couldn't find any shares to short on CMBX, so I shorted OWCP. I shorted near like 305-ish. Then I took some profits on the way down, and I took all my profits on the second higher low because the stock is showing some strength. So I'll be really careful with my shorts. I have huge positions on OWCP, so I'd rather be really careful than lose a lot. So I shorted again at 240-ish, and I see this crack is going down and OWCP is going red, and I added into the panic. So I chased like a noob, but in the end it comes out okay. So I shorted around 90k, 80k share, 85k shares at 2.45, and I was covering on the way down, and my last cover was 145. Pretty proud of the trade. One of the classic pattern of these sympathy plays and supernova. And after I traded OWCP, I was focusing on CMBX dip buy, and I bought this at 390-ish, sold at 430. Because I see some weakness, and this stock was up so much, it might still go lower. So I got scared out, but I actually went to 490, so well, missed that opportunity. Today I couldn't find any shares to short CMBX. I thought, and I know this has rooms to come down, so well, that's a shame. I would made a lot of money on the second after the first red day. That's the two play I was talking about. Now let's talk about less. EYEG. Those two plays have a really similar has a really similar strategy, close to each other. Hope this works. Okay. Now, this is a really classic pattern. I figured it out by myself. It only works on intraday. You can see in those two graphs similar to each other. So you had a morning push, it dips down and ended on 2.5. I wish you can see this smaller. Oh, here we go. Alright, when the stock is trading so much volume, I think right here was like 10 million. When the stock was trading on so much volume, you are looking for before 1 o'clock. So You see this squeezed up at 11, this squeezed up before 1 o'clock. So before 1 o'clock, you're looking for this solid bottom on a stock that pulled back of really high volume. Normally at the first top percent gainer. And only thing you're looking for is this little perks on this solid bottom. So that's the signal for you to go long, and has really good risk reward if you're risking the bottom. So if I see this perk, if I bought at 3, well, let's see, if I see this perk, if I bought at 360, I'm risking 340, so that's only 20 cents, and this might have the chance to break the day high, which is almost $1 a share. Oh, $2, $1.50, $1.50 risk reward. So the perks before 1 o'clock has really good chance to squeeze the shorts and what about to say? Squeeze the shorts and good risk reward. So look for these plays. This play happens multiple times that I noticed. So don't miss those. Those can make you a lot of money on the long side. It's probably one of my main strategy to go for these. I can't say home run, but for this solid bottom and the perks, and you might have a really good chance to break out. Let's talk about afternoon perks. Afternoon perks are not the thing you're trying to go long, because there's, at the end of the day, people trying to take their profits. I don't know when, but trying to take their profits on the way. If they see weakness, they're getting out. If they are smart, they're getting on the perks. So EYG is not a really good example. I remember APRI that I made 30K on it. It had a failed perk and it crushed from there. So you see this afternoon after 1 o'clock, there's a perk at 2ish and it failed, and that's I think that's where I'm shorting at. Yeah, that's where I'm shorting at, and it perks again and add it into it because I'm risking the day high, and afternoon perks doesn't have really good odds to succeed. So then perk failed and it puked the second day. The more time the afternoon perk fails, the more chance for the stock to drop. So if the stock is on a consolidating level and perks in the afternoon, I'm looking to short into that perks. And that's really useful. Also on the short side, all of these perks has to stand on a really high volume. Like today's play, NBFY. You see this, I saw this perk before 1 o'clock, so I bought it at 239, and the stock actually went up and broke this high. I'm risking a solid bottom on 235, and I sold in here 250 because I didn't see any strength coming from this perk. when you are in a trade, your risk moves when stock moves. So it doesn't move that much, but prevents you to lose money. So if I bought it like 335 and 339, I'm risking 235. And when this one dip, I'm risking 245. My risk moved 235 to 245. So if it break this level, I get out of the trade and I don't lose any money on it. I took a small profits because on this breakdown, it loses the momentum of this perk. And what I'm trying to look for, it's for buying next time, is next perk breaks this previous perk. So so I bought it on this breakout at 253, I think 254-ish. And after this dip, I'm risking this dip. So if this dip failed and it lose momentum, this perk. So I moved my risk to 254 to 257. And that prevents you to lose money. And that's one of the advantage to trade momentum stocks. And momentum perks, failed perks, and succeed perks. That's what I come up with these, how to deal with this fake out or fake down. Let's talk about PTX. Today I was shorting this PTX and it was kind of frustrating because I was shorting at this bounce, and when it holds the low, it broke this, and the common losses 247. I short like 210 and cover 247, and I see this momentum broke down again, and I shorted like 4-ish, and when it started holds and start perking back up, and this red candle doesn't go down. And I see it, and I cover that up for a small gain, and it actually went up, and I stopped touching it because there's so much up and down, so choppy, and you feel this breaking the day high again, and it actually comes down, loses momentum. I got my shares at 205, I think, on the way down, and I was holding this, and I see like, okay, so every 10 break high of the day fails, and most shares traded up at 4, so a bunch of longs are underwater. And after I see this perk failed, I added into this 390-ish level. I came out with total 15,000 shares. I covered half at covered all at 325-ish or 328-ish, 329, something like that. And because I see strength coming up, I was like, okay, I will need to cover this. And because I know it's going to bounce, I'm going to short into the bounce. And after I see this 360 bounce, I shorted at 350 again and covered up at like 320-ish because I'm too hungry and wouldn't cook. So that's how I played PTX. When morning spike doesn't hold, especially doesn't hold multiple times, people are getting frustrated with the stock. So emotional plays are only most of the time occurs in the morning. So failed perk, and that's one you need to know. Oh, the stuff I'm saying is for buying perks, you're looking for the stock had its morning spike. This one doesn't count as a morning spike, it counts as a failed morning spike. Let's draw a line. Okay, where's the line tool? Here it is. So stock was like this, and it had its morning spike, and it kind of pulled back, sustained on this. Well, was in on what has a solid bottom on this level, and you're looking for this perk between 11 o'clock to 1 o'clock. It had a solid bottom, and this resistance, the best scenario you are looking for, those two resistance are really close to each other. So why they have to be close to each other? Because people think, okay, so if I failed on this, I have a next really close resistance to catch me up, so I won't be losing that much. So people will go big on this good risk reward plays if they're really close together. Those are the best scenario. And if the stock is a low float and it's on heavy volume, it has a high chance to break this solid bottom, and people are risking this solid bottom, and there's a bunch of buys and short squeeze will push the stock, normally will break this day high, and you're looking to sell this. Well, the higher it goes, the better. You're looking for taking the profits along the way. I don't need to teach you that. And in the afternoon, you should have a bunch of profits taking. And you're looking for the momentum snap. If the momentum snap, there should be a bounce. You're looking for the short into that bounce for the afternoon fade. And if it doesn't fade, you get the hell out. If it fades, you take the profits on the way. So you're looking for the emotional parabolic short squeeze comes right back down and bounces, and you are risking that lower high to short the stock. Let's check out if I'm talking right. So that's, does it look the same? EYEG, does it look the same? So let's say APRI, does it look the same too? Pretty sure. Man, where was the chart? Okay, can't find it. Is there any afternoon spike move? Nope. Okay, NVFY. So this pretty much look the same chart that it has its morning spike. Okay. And top down, came back and got a solid bottom in 260. So this is not a low flow, and what you're looking for is a low flow. Because I noticed those chat rooms actually buy these perks too. The NVFY was actually like 18 million flow, so any stock under 10 million flow, it's a low flow, and what you're looking for is a perk. good risk reward, and you can put size into it. And see, let's talk about EYEG. See that? See this resistance at 226? Support 226, 220-ish, and support at 240-ish. So they're really close to each other. That's why it caused huge short squeeze and buying. That's okay. This one actually not close to each other, but this first dip was at 228. This support was at 250. So they're 20 cents close to each other. And here comes the short squeeze. Easy money, easy chart. What you are looking for, what you are looking for is all like this. Same pattern, same strategy. Hope you guys understand. And I haven't posted my trade and stuff because I'm getting too many questions on my Twitter, Instagram, and my profit account. I can't handle too many questions. So give me a rest for a little bit, and I would like to help as much as possible. I hope you guys see this pattern clearly. Take a look into it. Very, very useful pattern. That's what you need to trade these low flow stocks. Okay, let's talk about some OTC strategy. Oh, no. Okay, I'll double CP. OTC is really hard to get executed. So what you need to do for people who are paper trading and fear to go to or place a trade, you need to trade OTC because that's the one of the area for you to practice to shorting strength, covering weakness, and to buy in weakness and short strength. Buying weakness, sell strength, because you get crushed when you trying to chase in OTC. Chase is really bad for OTC, so paper trading in OTC practice shorting strength, covering weakness, because you can clearly see people covering and chasing and freaking out. And you can see this bounce and coming down, bounce coming down. I need to focus that covering weakness and buying strength. I sometimes make those mistakes too, so be really careful. I left a lot of money on the table because of those mistakes. Frustrating though. Alright, let's see. Other people asking questions. What did I trade? I think I was shorting EYEG yesterday. Yeah, I think I was shorting this here. I shorted. It bounced somewhere. I think I shorted here, and it bounced to 370. I cut my losses because it's breaking the day high, and it didn't have the strength to go up and smash down. And I shorted at 320 on this bounce, 320-ish, and I didn't look at it all day, and then just keep fading and fading and fading. Cover at the end of the day. That was an easy short. you have to understand that if this morning spike didn't hold, and you clearly understand most shares, the volume is really important. You can see most volume are traded above here. So biggest volume was on here. So it's above 330. So if dips down 330, lots of break. You can see people bought it here end of the day. So if stock price next morning was below that end of the yesterday, and you can see lots of longs are on the water. So if failed morning spike, they're losing their stuff. They're going to panic sell, and if it panics more, so that's how you get those fading. All right, that's the video lesson of the today, and I will do another one if I have the time. I need to go work out. All right, I will see you guys in the chat room tomorrow, and thank you.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire. So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.